What's up, everybody? Let's talk gold today. Everybody wants to know, is gold going up or is it going down? Let's figure that out. Hit it. Stacking surfer. The length will become your best friend. Balances in your bank and stack. All right, guys, let's talk gold. Gold is my favorite precious metal to invest in or to stack, okay? A lot of you are silver guys, and that's totally cool. You started off with silver. It's a great place to start. For me, I sold a business and I needed to hedge against inflation. I didn't have any other investments to run into, so I started off with gold. It's kind of the way I went with it, and that's cool. The other thing that's happened with me with gold is I've been able to sell some of it. Now, I know a lot of you guys are stackers, hardcore stackers. You're never gonna sell your gold and silver, and I think that's great. For me, I put a large amount of money into it, knowing that I was going to sell it. So I was just looking for a short-term hedge against inflation. Some of you may be doing that. A lot of you may just be holding it forever. So I have multiple stacks, guys. I've got a stack that goes into my vaulting facility that's gonna stay there and it's going nowhere. I don't plan on selling it. I plan on dying with it and giving it to my kids. If there's an emergency, I always have it to fall back on. But I've got my other investment stack that I use that came from my business that I sold, that I will be selling and turning that back into another business. Or I may actually be buying some real estate that is cash flowing to be able to create additional cash flow. So my strategy was a little bit different than that. You guys don't hear me talking much about that strategy. If you have interest in learning more about how to use gold as a hedge, how to invest in it versus just stack it, leave a comment below, and that's something that I can cover off on our member Zoom calls, or I'll even create a video about it. Please hit the subscribe button and the bell icon. That'll notify you of any of the new videos that are coming out. And then also hit that thumbs up. That helps the algorithm know that you guys like the video. So let's talk about gold. Gold is my favorite precious metal. And why is that? It's so fun to hold. It's so shiny. Once you have it in your hands, you don't want to let it go. There's just some magic about gold. It doesn't corrupt. You can put this stuff in the bottom of the ocean and the salt water will not corrupt it. It'll look the same as it was on day one. It really doesn't disappear. It doesn't get used up. It gets reformed into new shapes and to new uses. I do like silver. That's my second one as well. And I do have a fair amount of silver, but I'm much heavier on gold. Now, for most of you guys that are stackers, you may say, hey, why be so heavy on gold? It's my earlier explanation about my business. So I won't always be heavy in gold. And this year, I'm looking at buying more silver than I am gold. And the main reason for that is the gold to silver ratio. Right now, you're looking at, I think it's 90 ounces of silver to 1 ounce of gold. That tells me that it's a great time to be buying silver. Maybe not as good of a time to be buying gold. When I bought a lot of my gold, we were below 80 on the ratio. So even that's a little bit on the high side. But I bought it for a specific reason. Where is the price of gold going? Is it going up or is it going down? Or is it gonna stay flat? I think we will see gold go back down below $1,900 an ounce before we see it hit $2,200 an ounce. Okay, that's just my opinion, not financial advice. I'm not a financial advisor. Silver, I think we will see silver getting down below $18 an ounce before we see it hit $50 an ounce. Okay, and I think that one's probably a little bit of a safer bet than on the gold. But why do I think that? Just about every regional bank in the country is having liquidity crunches and issues. Over $200 billion has been lent by the Federal Reserve to the banks to shore up all of their bonds that they've purchased that are now underwater. And they're underwater because they bought them way below current interest rates, or I should say coupon rates. And as soon as those interest rates were raised, the coupon rates went way up. So if you had a coupon rate at about a 1% and now it's at 5%, you basically lose 5 times the value of that original bond or T-bill in order to sell it. Why would they sell it? Well, when there's liquidity crunches, if you remember my videos on fractional reserve lending from banks, they're able to lend out 90 to 98% of every dollar that they take in deposits. And when they do that, they're left with a few percent left. And a lot of times they can take that and put it into bonds. So there really is not a lot of cash floating around in the banking system right now. And in each bank, there's not a lot of cash for someone to go and rob the bank anyway. You're not gonna get millions of dollars of cash there. So that leads to an issue when you have banks needing to become more liquid due to bad loans. Also, if there happens to be a run on the bank and people go to take a lot of the money out, you're gonna have an issue there. Both of those are starting to happen right now. So the run on the banks is coming in the form of people taking their money out of the bank and putting it into high yield interest accounts or buying bonds themselves. And that has taken out, I wanna say it was around $1 trillion. I'll have to see if I can find the actual information and put it up here. But I believe it's around $1 trillion has left the banks and gone into other investments that pay a much higher interest rate. So instead of 1% interest, you're getting 5% interest. Okay, a lot of people have done that. Us stackers have been taking our cash out of the bank and either putting it into our homes or into our vaulting facilities or buying gold and silver with it. So we're also taking liquidity out of the banks too. The second one is what's happening with the banks around mortgage-backed securities, primarily commercial. So a lot of these regional banks made money by lending money to developers or to businesses that bought office complexes, okay? So this can go anywhere from your one-story, strip mall offices that you see in suburbs all the way up to the large buildings in cities. These buildings are not being occupied anymore by the workforce. People are working from home. And because of that, companies no longer want to renew their leases. Some of them may just not pay the leases as well. We now have banks that are going to be taking back those loans, or there could be some defaults. In addition to that, most of these people that have borrowed at a very low rate, so 1 to 3%. And every 3 years they get those loans get reevaluated with the interest rate. Okay, it's something that happens around the world. We're not as familiar with it because it doesn't happen to our mortgages here, but you go to Australia, I believe in the UK it's very similar too, that there's a time period where the rates are fixed and then there's a time period where they get readjusted. That's what's happening with the mortgage-backed securities that are on the commercial side here. Those loans are now being readjusted over the next 18 months. And they're going to be going from that 1 to 3% to 5 to 8%. And vacancies are at about 50%. I can tell you what's going to happen. Most of these businesses are either going to go underwater, close shop, or they're going to turn those loans back and say, we don't want the property anymore. Most of them probably did not put enough money down that it's worth trying to hold on to that and taking a major loss on a monthly basis. As that starts to happen, the bank has to account on their balance sheet for those defaults, and they have to come up with more cash. So then they have to sell the bonds. Well, they can't sell the bonds because they're not worth anything right now. So that is where the Fed is giving them money to borrow. Well, all of that comes due next month. So if the Fed does not extend that loan program, then we're going to have a major problem with a bunch of banks melting down. Even if they do extend it, if the Fed does not lower interest rates, it's going to break the banks too. And in addition to that, if they raise interest rates, which most of you are not thinking about, but there is a very high probability in my book, they're going to start raising them again. We have not raised them high enough to take out inflation. If you don't raise them high enough, inflation comes back, and it's already starting. It just happened with this month's CPI rating. It's going to come back, and it usually comes back higher than it was before because you did not address and fix the problem. So for example, with the company I work with, we do not get standard of living increases, they give us stock. Now luckily we've had a good turn in the stock. That's how I get more money. Well, at some point, if inflation gets high enough, people at my company are going to push back on the company and say, hey, you've got to increase the standard of living again and go up. So they did do that in 2023. They're probably going to have pressure to do that again. That's inflationary. So are the prices of everything else you buy going up too. So I'm here at a mall, and here's a movie theater over here, right there. And you got all these shops behind me. Movies here are running about $20 a movie now to $25 if you're doing like an IMAX. That's expensive. I remember people telling me that movies used to be 5 cents. Why am I saying all this banking stuff in a gold video? I think gold is going to be the place to go. I would be dollar cost averaging if I had extra funds right now to buy gold. Right now I'm focusing on silver, as I mentioned. I'm pretty heavy on gold. I'm not an official advisor, but that would be my coaching recommendation, would be to consider doing dollar cost averaging. Why do I think the prices can go down here instead of going up? The reason is the banks. If interest rates hold for the rest of the year, which I think is very likely. If the interest rates go up, which I also think is very, very likely, you're going to see banks break. And at first it's going to be mergers, and then it's going to be banks are starting to fail at a high number. And as they start to fail at a high number, I think what you're going to start to see is what's called a bail-in. I'm not going to get into all the details on that, but it's basically taking the depositor's money to bail out the bank instead of the taxpayer's money from the Federal Reserve. That right there will cause runs on the bank. People will be freaked and want to take their money out. So I'm not trying to scare you guys. I'm just saying have some cash at home, have some gold and silver at home to shore that up, and make sure you don't put in more than $250,000 in an account. Make sure it's FDIC insured. So I see those things happening. I see the mortgage-backed, the commercial mortgage-backed securities thing breaking this year into next year as well. And so my projection or my prediction is that we're going to see higher rates this year than they are today. And I think we're going to see things break, and I think that will put some negative downward pressure both on crypto and on gold and silver. And that's why I think it's going to go down before it goes up. I could be wrong though, okay? I'm not giving that 100% certainty. And so for that, I'm continuing to buy on a weekly basis just in case I'm wrong. Now, if we get to a point where it really dips, I have reserves that I can use to buy that dip. So if I see gold going below 1,800 bucks and I see silver going below $18, you better believe I'm going to be buying a lot more of that. And I'll be finding ways to sell other things around my house I don't need to put more into the metals. Now, where do I think it's going to be at the end of the year? Well, it depends on how fast this stuff happens. If it happens in the spring or summer, then I could see gold and silver being higher at the end of the year after the banking issues starts to really sink in. We saw that last year in March when the banks had issues. We saw that gold and silver jumped because it was a safe haven. But if we see the entire banking system starting to collapse down, it will pull everything with it. It will most likely cause anywhere from a 20 to 30% correction to a crash of maybe 50% in the stock market. And I'm getting this from all the different sources that I'm listening to and watching and all my financial news. That's stuff that you guys have got to be paying attention to and looking out for, especially if you're stacking a lot of the metals. If you're stacking too much metals and you don't have enough cash reserves, and we see the metals dip, you may have to sell at a lower point. You don't want to have to do that. I've been selling gold recently, but I'm selling it at $21.50 an ounce when I bought it at $1,930. If you're doing some of that, it makes sense. There is a bridge there. Now, to me, that just makes up for inflation. That is not profits. The IRS would have a different story on that. I think it's unconstitutional for taxes to be on that, and I'm glad to see a lot of states are starting to fight it. California is not one of them. So anyway, that's my advice to you guys. Keep dollar cost averaging, have some cash reserves in case you have an emergency when the prices go down, and so you can also buy the dip. But I think we're going to see higher gold prices this year. My prediction for this year is to see gold break $2,200 by the end of the year, and to see silver break $30. I think we'll see a dip before that. Keep on stacking, guys. I love it. If you haven't joined the channel yet, please hit the subscribe and bell icon and also the thumbs up. And if you're not a channel member yet, you're missing out. Every month we have a Zoom call that's very private that we are able to go in and address issues that each of the members have and talk about a specific subject. I also have a mentor program that is a one-on-one coaching that I can definitely, would love to take you guys through my philosophy of stacking and investing, as well as review your stack. So those are the two options I have in memberships, but I recommend joining one of those if you guys haven't done so yet. It's not very expensive, it supports the channel, and we're also going to be doing a buying club at some point here in the near future, and you'll be able to get better prices of gold and silver than I think you're going to find just about anywhere else. So that's one of my goals, is to help you guys be able to grow your stacks. So until next time, peace out.